Hello, this is Ron, Henderson President and broker in multi-real estate services in Los Angeles. I've been blogging a pretty fair amount in relation to the unintended consequences of the mortgage forbearance process. But I'm still hearing a ton of misinformation coming from realtors, the media, and even the loan servicers. Remember, some of the representatives working for the loan servicers were just hired on within the past few months. Prior to that, could have been flipping burgers or scooping ice cream. Bottom line is they don't understand underwriting guidelines. They're working off a script. Now, there is a difference between portfolio lenders and those that sell on the secondary money market, like government-backed Freddie and Fannie and HUD loans. Now, the bottom line is if you have the income and the assets to make the payments, you really should. The CARES Act passed by Congress in the end of March. That is to help those that are in a distressed position to defer their payment 3 months. Now it's 6 months, or an extension another to make it a full 12 months. It's not free money. Now, within the CARE Act also, it indicates that the servicers must report the credit accounts as current. Basically, all they're saying is that you're not going to have a derogatory on your credit saying that you're 30, 60, 90 days late. But there is going to be put on your credit report that the property is in forbearance. So that's a big red flag to lenders going into the future. Okay, so even though there were no technically late payments, there is going to be a problem going forward. I've had clients ask direct to the servicers if getting the forbearance is going to affect their ability to get a loan into the future, and they say no. That is incorrect. Freddie and Fannie have already given guidance indicating that anybody in a forbearance isn't going to get a Freddie or Fannie loan. And also, they are not waiving that 12-month consistent payment history underwriting guideline, which basically means if you foregoed April, May, June payments and your first payment is in July, that is month one. So then you got to wait a year from that. Here's another kicker. Say you don't have the money saved up to make up those deferred payments at the end of, say, that 3-month time frame, and you have to get a loan modification. Then you're stuck in the same position that those during the last recession in 2009, when they got the loan mod, may have to wait another 4 years or so to get that A paper. Again, that's a bummer when you're talking about high 2% interest rates that we're probably going to be seeing in the next couple of months. Another thing I'm dealing with right now is I had a client that called the lender just to get information on the forbearance. Didn't want it. But somebody flipped a switch down there, put him into the forbearance program, and even though he wasn't in a distressed position, making the house payments, now we're getting his refinance, but we have to put a big package together to show that the forbearance that's being reflected wasn't asked for, he's not in a distressed position, and that he's been making his house payments during this time frame. We're getting pushback from the underwriter. It's going to work, but it's a total pain in the rear. So it's just another thing to look at. Check your credit report, make sure that something like that's not showing. This is a moving target. We may get some kind of additional program in the future like we had TARP back last time around, but that program wasn't all that great. You still won't get the optimal rates, but it might be something. We don't know what they're going to give us. Give me a call if you have any specific questions. Always available. All right? Stay healthy. Take care.